Hello, everyone. This is Daniela Cambone for Stansberry Investor, and we are still recuperating and digesting all that incredible information from the great debate featuring Michael Saylor and Frank Giustra in Bitcoin versus gold. So today I wanted to bring on a special guest, someone who has worked equally in both fields and still continues till this day to do a post-debate analysis with me. So please welcome Josh Crumb. Josh was the previous head of metals research for Goldman Sachs. He currently sits on the board of Fortress Technologies. It's a company which utilizes Bitcoin mining to capture stranded flare gas to power the security of the Bitcoin blockchain. He was also a co-founder of BitGold. Right now, he is the CEO of Abex. It's a company using blockchain technology to revolutionize energy and commodity trading. And something really important to highlight, Josh has advised Jeff Curry and the Goldman Sachs executive team on Bitcoin. He also has taken part in a debate of Bitcoin and gold with Larry Summers and was invited along with BitGold co-founder Roy Sabag to discuss Bitcoin and gold with legendary currency trader George Soros. So that's Josh's background. And I thought it was very important to give that in-depth background so you really understand where he's coming from. Josh, welcome for the first time here to Stansberry Investor.
Thank you, Daniela, and thank you for hosting this. And I think that both Michael and Frank are very passionate about the industries that they're in. And so to have that type of debate was excellent. So thank you, and I look forward to discussing it with you.
Yeah, well, thank you for agreeing to come on because there's a lot to digest here. I know I've watched the debate multiple times. I know we were talking offline. You watched it over 2 times, and it's a long one. You know, it's close to 2 hours. So there's a lot to break down here. I guess first and foremost, what are the first takeaways? Just generally, and then we'll do a deep dive here. But what was the feeling you walked away with from the debate?
Yeah, to be honest, I think it was very good that both sides really captured where we're at in this discussion. Again, I've been having this discussion for 8 or 9 years now, and with some very very smart people on both sides. And I think first and foremost, I think they both captured kind of where we're at on each sort of bias, looking at the other. So I think they both did very good, did very well on that. But I guess one of the issues is they were sort of talking past each other, right? I mean, with Frank, was really focusing on the risks, and that's the reason why a lot of people buy gold, is because of the risks. Whereas Michael was obviously very much focused on the upside and the vision and the technology, which is also the reason why people buy Bitcoin. So they both kind of achieved their objectives. And with their bias, but it's really hard because it was a hard debate to sort of analyze, because people come from a very different perspective on both of these assets.
Exactly. And I guess at the end of the day, it really depends the purpose that you're buying the assets for also. So let's start with some strengths from the debate, right? So if we start with Frank.
You're trying to create a narrative for a higher price for Bitcoin. And in order to do that, you need to convince everyone out there that gold is worthless, and all of that value that currently resides in gold will be all transferred. All $12 trillion of it will be transferred to Bitcoin.
I think the point where he was really, trying to bring home here is that Bitcoin needs to chip away at gold's $11 trillion market cap, right? So right now, Bitcoin has a market cap of around 1 trillion, gold 11 trillion. And the point that I believe Frank was trying to make is that Michael needs the energy from the gold camp to keep his narrative afloat. So I'd like to get your perspective of, do you think there's truth to that? Does Bitcoin need gold's market share to keep the price going higher?
Yeah, thank you. I think that was a great point. And anyone that's familiar with my debates on Twitter around this point, I am a little bit biased that I actually agree with Frank quite strongly on that. I believe Bitcoin as an asset and as a network should be focused more on the utility and the good it does, rather than always trying to attack other assets for flow of funds. So I agree with this. I've never liked drop gold. I think it's, frankly, it's really bad financial advice. You can say, depending on your risk portfolio, you should own Bitcoin instead of gold for specific reasons in your portfolio. And I've said that for many years, as has Frank, by the way. But this sort of zero-sum nature, I think, is very problematic. The whole Drop Gold campaign, I think, is very problematic because it is always trying to sort of find that next investor.
Okay, Josh, and now I want to play a clip, which I thought was a pretty strong comment from Michael Saylor.
Newmont Mining, $11 billion in revenue, has $5.5 billion in cash, EBITDA of $5.7 billion last year, paid a massive dividend, $1.45. They actually mine gold at $750 to $1,000 an ounce. They've returned $2.7 billion to their shareholders. They paid $704 million in taxes. They're dividending out 40 to 60% of the free cash flow above $1,200 an ounce. They have effectively zero net debt, and yet they borrowed $985 million at 225 basis points last year. They could borrow 5 to 10 billion more. What does this mean? It means they're mining gold as fast as they can so that they can buy cash. They don't even think it's worth, they could buy $10 billion of gold for 2.5% interest. They don't think the gold is going up. They think the gold is going back to 1,200. These gold miners don't believe in gold. They don't have any gold on their balance sheet. They could borrow $20 billion at 3% interest and buy gold if they believed in it. They don't believe in it.
So basically what Michael was saying here, Josh, is that, look, the companies, they're paying a double tax. They're paying income plus dividend to avoid holding gold on their balance sheets when their cost of capital is potentially less than 3%. He's saying they could borrow, 10 to 20 billion at 3%, avoid 10 billion in tax, and own the gold, which would have a higher price. Michael said they run the business to maximize their tax bill, minimize their cheap debt. They maximize the supply of gold while in turn minimizing the price of gold. So what did you think of his underlying study here of Newmont and Barrick?
Yeah, I think I agree with you that it was a very strong point when he was talking about the miners and the way that a lot of the industry doesn't even believe in their own asset in many ways. So I think there's two pieces to break down there, though. I think one of it is to sort of levering up to buy their asset. I think that's very problematic, and I think Frank had great points, particularly at the end, that this is really sort of reckless behavior to be levering up to sort of double down on your asset. And I think if you saw, kind of before the financial crisis, a lot of the miners that were high flyers in 06, 07, that were highly levered to their asset or any commodity. Obviously all drew down significantly in the financial crisis and had significant problems. So I wouldn't say that that's a sound financial advice for any resource company to totally lever up to their top line revenue asset, particularly when they don't control that asset price, right? So I think that's risky to lever up towards it. However, the gold industry has been very bad, in my view, of not holding higher gold inventories, particularly in negative real rate environments. If you're not getting paid for the currency you're held on your balance sheet, you're speculating on it, every bit as much as you're speculating on gold. So I think it's very problematic that more gold miners don't own more gold compared to basically negative real yielding currencies. But to lever up is reckless behavior in my mind.
Let's move to the price and performance now, Josh, where I think it's hard to make a case against Bitcoin here, volatility aside. But if we look at the stats, year to date, Bitcoin up over 85%, whereas if I look at the GLD today, we're down year to date close to 7%.
Yeah, I mean the performance is the one place that I think there's just nothing that the gold bugs can really say at this point. In many ways, right? Yeah, and again, it goes back to this problematic narrative that the gold bugs were running with for so long, and that is gold is going to 10,000. We're going to have all this monetary debasement, and gold is going to soar. Well, what's happened is basically Bitcoin has taken that narrative because is soaring. But again, like if I come back to why someone should own gold in the portfolio, and I think, you know, Frank would agree with me on this, it really should be your defensive asset, not your offensive asset. And that's actually what Michael said too. He actually used that same thing, that gold is defense and Bitcoin is offense. And I actually do agree with that. And so yeah, I mean it's very hard, and I'll admit, you know, and I'm sure Frank would as well, that we have been too conservative and maybe over focused on the risks. And not, you know, gotten the ride that, you know, maybe in hindsight was a little bit more inevitable. But again, I think that comes back to the philosophy of why you're buying these assets.
Let's move on to history, where Frank had a really a strong quote that I want to just play for you here.
We have never seen Bitcoin tested in a financial crisis. So that, again, US dollar crisis, financial crisis, any crisis, that's where you'll see the true test to Bitcoin as a store of value. The other test is inflation. Gold performs really well in periods of high inflation. And I know Michael is suggesting that we're not going to see high inflation in the CPI, and I think he is dead wrong. You only have to watch the commodity prices going up in price, food prices going up in price. Inflation will hit the CPI. There's no doubt about that.
So Frank was basically saying, you know, and I'm sure a lot of people would point out that gold has history on its side, over a 3,000 year history, and Bitcoin is 12 years old. Yes, we know blockchain has been around much longer, but his point was Bitcoin has not been tested. So thoughts on that, because we saw what Bitcoin did at the start of the pandemic in March, and yes, it had recuperated after that. Yet gold did hit a nominal high of 2,000 during the pandemic. So what are your thoughts on performance here, and whether Bitcoin has really not been tested, Josh?
Yeah, I happen to agree with that. And you know, people look at the absolute numbers so often. But again, if you actually had a bit of gold as well as Bitcoin in this last correction, the amount of gold that you had versus other assets, you know, even, you know, Tesla, Facebook, you know, it doesn't matter what high flying stock you had, you know, gold, yes, gold sold off like other things in this sort of dollar squeeze. But if you had gold for your liquidity, it would have been a lot easier to buy that dip at 3,000-4,000 Bitcoin than holding other assets. So again, it comes back to what is the asset for? And I think Frank makes a great point that it has not been fully tested through a true financial crisis. And I think another key point there that, you know, that's related is, you know, Michael used words like immortal for Bitcoin, which is just total nonsense, right? So again, like I believe in the technology. I think it's revolutionary. When you say it's immortal, let's break down the first principles of what immortal is in Bitcoin. Is it the SHA-256 algorithm and prime number theory? Is that immortal? You know, is it the actual elliptic curve? Is that technology immortal? You know, the scientific method would say no. Like, you got to falsify these things, and you're constantly improving technology. So to use words like Bitcoin's now immortal and gold's not is just nonsense. So yeah, we have to be careful when we look at these returns without like seeing a full cycle. And so we really need to see that full cycle, like a proper recession, to understand how this asset's going to perform.
Let me bring this up, because I took part in a clubhouse. They invited me post debate, and it was a Bitcoin cafe, so filled with the cyber hornets. And what one line they loved from Michael, which I thought was interesting, is when he said that people fight wars over gold, have fought wars over gold, that gold starts wars.
Gold invites violence.
The fact that he brought that up today in 2021, I mean, I could see that, you know, of course, that was a historic past of gold, but the fact that he brought it back today, did you think that was interesting, or what did you make of that statement?
Yeah, look, it was one that was strong and got a lot of sort of viral social media follow-up for sure. But again, like, you know, one of my problems with some of Michael's arguments is it sort of moved between gold, currency, asset, and it kind of picked pick different paths throughout the debate. So if you think about like what those wars were after, yes, gold was part of it, but it was also the money supply, and it was the economic infrastructure of these countries. Gold is no longer part of the formal monetary supply. So I don't think you have that same sort of attack a country for its gold mentality. But any asset, whether it's real estate, or maybe hydroelectric dams or water, or if there was enough Bitcoin in one country, sure, like people are going to attack and go after infrastructure and go after assets. So I don't see why that specifically is negative to gold.
So when you hear statements that gold is the past, Bitcoin is the future, what do you tell those people?
Yeah, is it the past or future of monetary systems and currency systems? Well, right now, currently gold is the past, right? So like we don't use gold formally in the monetary system. So I don't think that's what gold advocates should be focused on. I think what gold does as a store of value, and actually Michael made some great points in his intro about energy and the importance of energy in the role of store of value.
Human civilization rises through channeling energy. If we want to better the human condition, we need to be able to capture, store, and channel that energy.
Well, this is a point I make over and over and have for many, many years, and that gold's value does come from energy. Because it's the rarest element, it takes more energy than anything else to actually find and produce. So it's always going to have a very high energy cost. But once you produce it, it lasts forever. So it's got a very low energy carry. So that makes it a very good store of value. And nothing that Bitcoin does changes that fact that it's going to take a lot of energy to produce and it takes very little energy to store. So Bitcoin doesn't change those properties. Now, Bitcoin may improve things like transactability and security and privacy, and those are all the reasons to invest in it. But it doesn't change gold fundamentally, like the transportation of a horse and buggy versus an automobile. Like technologists use these arguments, but it's just not the right argument, because gold is not our monetary system right now. So it's not changing anything.
I want to ask you this, Josh. I could keep going on forever with you, but and I brought this point up to Michael, that because there are a finite number of Bitcoin, and people are waiting for the price to go up, that is it purely a speculative play, and it's not effectively being used as a currency.
Yeah, again, I think that's pretty objectively correct. And we saw the data ourselves. When I was in that business, both on the gold and Bitcoin side, that people were buying it as an asset to hold, not to transact. Whether it was BitGold or and remember, Coinbase, who just went public, their original business model was all about transactions and being the next PayPal, because of blockchain. And then the whole narrative switched to being an asset, sort of custodian.
Josh, let me ask you this. I'm not going to, ask you to reveal private conversations you've had with Jeff Curry and the people and the executive team over at Goldman Sachs, but we are seeing a Wall Street embracement of Bitcoin, right? It seems that no one wants to miss this train right now. Can you give us any insights as to why major banks like Goldman are moving in this direction? Is it to appease public favor, or is it because they're really changing their mind frame on this asset and embracing it now? What's the truth here?
Yeah, so what I see in these institutions, and actually Frank made a good point on this, they're coming in to focus on the trading side and the traders, the hedge fund clients, the momentum clients. So first off, just the scale and the fees from Bitcoin trading is now surpassing many commodities. So just like they have a desk that trades cotton, they're going to have a desk that trades Bitcoin, because that's just the market. The market told them that there's money here, form a business and trade it. And the type of institutions coming in, again, are the ones higher in the risk curve. They're the hedge funds that are also going to sell it very quickly when they have to. So what we haven't seen yet, it's starting, right? The corporate, balance sheets, the pension funds, the insurance funds, like real institutional buy and hold type investors. It's very, very early. And I would say in those banks, they're still questioning, will these guys ever really need or want to buy these assets? And that's still a big question that hasn't been answered yet.
Josh Crumb, I cannot thank you enough for this excellent analysis. Thank you so much for joining me. I can't think of a better person I've brought on for this post-debate analysis. Thank you, Josh.
All right, thank you, Danielle, and thanks again for all the effort you put into this, because I think it was a very important sort of piece of informational content out there.
No, I love doing it. Like I said, I was honored to do it, and honestly, I mean it, when I say that I think that they've both done a great public service, that I really believe this is a debate that will go down in history, and to educate people. And at the end of the day, everyone can make up their own minds, but they both did a fantastic job. So thank you, Josh. And again, I thank Michael and Frank, and I thank all of you for your support and for watching. Stay tuned to Stansberry Investor. We'll have much more content for you coming your way. In the meantime, remember to share us where you watch us. That's it for me today. I'm Daniela Cambone.